Hey everyone, Dan Longman here with Priority Lending. Hopefully you're all doing well. Happy Friday. Hey, so just wanted to get some information out to you here before the weekend. Just wanted to give a quick market update as far as what's going on in the real estate world, and then also an interest rate update with mortgage rates. So real estate market, most of you know it's still a crazy market out there. It is a seller's market. A lot of this, if not all of it, has to do with very little inventory. So this very little inventory is creating bidding wars. It's creating an increase in price in real estate. Just to put things in perspective, I had read one article where the inventory here in Broward County is 40% lower than it was at this time last year. That's a pretty big number. So you can only imagine what that's going to do to buyers. That pie has shrunken as far as the amount of homes that they can look for. And we're heading into the spring, which is typically our busy season. So I think it's one of those things where it's probably going to get worse before it gets better, but we'll have to see. But if you are a buyer out there, don't be discouraged. There are still homes available that, in your certain price point. It's just you have to be aggressive. And what I mean by that is you have to be fully pre-approved. You got to be ready. You got to be ready to jump on that. You can't wait around because that most likely that property is going to be gone if you're not ready to purchase. As far as mortgage rates, so most of you know the federal chair, Jerome Powell, and the Federal Reserve, they have announced that they're going to increase rates. This announcement was last year. They were going to increase the federal funds rate, and rightfully so. I mean, the inflation going on right now. Inflation, when they came out with the numbers a couple weeks ago, it hit a 40-year high. Most of you see it, right? We see it at the gas pump. We see it in the grocery store. You pretty much see it everywhere. Costs of goods have gone up. And the only way to really combat inflation is to increase rates. But a lot of the critics say that the Fed has waited too long. The Fed was saying this inflation is transitory. I don't think they thought it was as big a deal. And they've waited. A lot of people think that they should have increased rates sooner. But now they're kind of in a pickle because of this Russian-Ukraine invasion. That has now, obviously you see what it's doing to the market. The market is very volatile right now. So the fact that they've waited so long, and everyone predicted that this first increase when they meet later this month in March, they were going to increase rates 0.5%. Well, now because of the Russia-Ukraine conflict, they have announced that it's most likely going to be 0.25%. So, is this going to be enough to combat inflation? I don't know. We're really going to have to see. But I do agree that they may have waited too long. But I also would not want to be the Jerome Powell right now because he's, like I said, he's in a pickle. He's in a really tough position because he's trying to combat inflation, but he also doesn't want to send the economy into a recession. Especially what's going on now with the Russia-Ukraine war. So really have to see how this plays out. But I do want to just kind of remind people, because I get this question a lot, when the Fed does increase rates, remember this is short term. They're increasing the federal funds rate, which is the overnight rate that they lend to banks. This does have a direct impact on a lot of short-term financing. So credit cards, car loans, your equity lines of credit will have a direct impact when the Fed increases it. It doesn't necessarily translate into mortgage rates. There's a lot of other factors that make up mortgage rates. So I just want to, keep that in perspective. Because honestly, when they increase doesn't mean that mortgage rates are going to necessarily go up. A lot of times we've already felt that just by the announcement itself and other factors. So right now, mortgage rates have actually gone down a little bit because of what's going on in Ukraine. There's a lot of uncertainty. So that's one thing I can tell you too. Markets do not like uncertainty, right? They like things that are certain, safe, predictable. When it's very uncertain, that's where you get the markets rattled. You see a lot of volatility. Personally, I think Jerome Powell, if he could go and take an approach more of like Alan Greenspan did when it comes to raising the rates and kind of just come out and say what they're going to do and when they're going to do it. Kind of this loosey-goose kind of, not sure when and how much we're going to do. If they were just definitive, said, hey, we're going to raise a half here and then we're going to go a quarter, etc. But I do, like I said, I do understand the predicament he's in with the war breaking out. But I think the fact that he waited and now he's in this pickle. So we'll have to see how it plays out. But for right now, mortgage rates seem to be holding steady. Maybe we'll even go down a little bit here. But if you have any questions whatsoever, feel free to reach out. We are here to help. Hope you all have a great weekend, and I'll talk to you soon. Take care. Bye-bye.